Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated, her website jugglingdynamite.com. Welcome back to the show, Danielle.
Hey, thank you, Jim.
Danielle, what are the expected financial impacts of the U.S. election?
Well, for one thing, it's interesting because basically the consensus forecast, although there was, a lot of concern about a messy outcome for the election, consensus economic forecasts had presumed two things for 2021, a definitive outcome on the election and the prospects of an effective vaccine. So those things have been sort of priced into the growth forecast looking forward into 2021. And so, in fact, this month we did get a definitive answer to the U.S. election, and we got news of trial 3 potential candidates likely to be approved in the not-too-distant future as effective vaccines. So those things both came to fruition. But that's not new news because that's already what, as I say, the base case was for most forecasters that those two things were going to be accomplished before the end of December. So now we have to look at, what change, if any, does the actual government head change in the United States? How does it impact, the American economy being the biggest economy in the world, and as a result also its trading partners, i.e. Canada, etc. So if you look at it, really, it's a very, other than the mayhem and chaos of the Trump administration, which I say was a big sideshow and distraction from anything that was really relevant or important, I think now we're going to have a bit more sobriety in the way in which policy is implemented and indeed in, the way that the international community perceives America and its leadership. However, that said, I wouldn't suggest that there's that much difference in this transition. Biden is a centrist. His policies are centrist. As a case in point, he appointed Janet Yellen as his head of Treasury. That would be the most status quo pick you could make in that job, given that she came from leading the Fed. So this is really a vote for continued monetary policy and fiscal policy, printing debt to add liquidity. She made comments this week that you could consider Congress could consider changing the legislation so that the central bank could buy stocks if necessary in the next implosion or bear market. So there's an example of this expansionary monetary theory still at the helm. The revolving door is alive and well. So, in many ways, this transition of figurehead is not going to result in much different in terms of policy. Now, on things like social justice and environmental impacts, the Keystone Pipeline, various things like that. Mr. Biden didn't endorse the New Green Deal, but he did endorse a lot of the components of it, even if he didn't say the name of the overall category. He definitely talked about many of the constituent things that the New Green Deal people were pushing. So I think we're likely to see, less fracking in America, less new drilling. Everything that an executive order can accomplish, Mr. Biden has promised to do that within the first few days of his administration. So I think in terms of Canadian oil, it's probably not a great outcome. It's probably more bearish than when Mr. Trump was there. I would say that both leaders have professed a America First policy, which they intend to continue with respect to their trade agreements. So I think in that way there won't be a lot of difference. basically now with a very divisive Congress, we're likely to see smaller stimulus packages going forward in 21 than we potentially could have seen if there was a greater blue wave than we saw. So I think in some ways it won't be very much different at all. In other ways, I think we will get less stimulus, perhaps delayed, which again could impact the slowness of the recovery in 21. Miss Yellen is a labor economist, so she believes that she can make an impact on the rate of unemployment through monetary and fiscal policy. Others are much more skeptical of that. And in fact, it's interesting because although we've seen this sharp rebound in financial assets from March, we have not seen, up to October when these new lockdowns began, there was just a percentage of the jobs lost up until October had recovered. So the jobs that were lost in the spring, yes, we had some recovery, but employment is still a fraction of what it was at the peak in 2019. And I think that, traditionally we know that the recovery in employment tends to take about 4 years from the peak when you come into a recession. And given the duration and depth of this particular recession being the worst since the 1930s, being very much global, and being ongoing in terms of the impact on the supply chain, I think that you could very well see a longer period before we get back to 2019 employment this time. And so that is a major concern, of course, that on top of the failure of small businesses, which is continuing apace, and a lot of wobbles through highly indebted property markets and corporations which have record debt. So I think there's a lot of concern about how we can get a sustainable recovery going here. And although people have acted with great, joy at the news of this amazing, Project Warp Speed has brought forth 7 potential contenders, 10 I think actually coming into third trials for this vaccine, which is all record pace, never seen before. So very, very positive. This is the impact of the rapid mapping of the genome and of the scientists releasing it to the public, the Chinese scientists to their community in February of the year, and we got the fastest potential vaccines. All very good. But now we have to look at, how are we going to get the rollout? How quickly? And then there's this appetite question because our head of the National Immunization Board in Canada has warned that it'll probably be till the end of 21 that Canadians will have to be to the end of 21 before we'll have to be, that we'll continue to have to use physical distancing and mask wearing and all this because we just won't be able to get everyone vaccinated, in the first quarter of the year. That's likely to be the case throughout. And then, as I say, the appetite question, various surveys have been taken where up to 50% of the people recently surveyed, certainly in America, said that they are not inclined to get the vaccine at all. There's a definite mistrust or lack of appetite for getting a vaccine, even though, it's efficacious in preventing the spread potentially, which we still don't know for sure. But the thing is that a lot of people are concerned about the after effects, especially about a rush to vaccine, which is how this one is perceived, or these ones are perceived. So there's a lot of question marks. And in a best case scenario, we get a fully vaccinated, 70% at least population vaccinated by the end of 21. But in the meantime, we're going to have a hell of a tough slog here. There's going to have to be the next round of stimulus in Canada, no doubt, in the new year. We are back into the lockdown period, as you well know, Jim. Places like Alberta and other provinces that were, not anywhere near the spread rates of places like Ontario and Quebec are now finding that there is no magic. The virus doesn't care about your political beliefs or your location. It just transfers from person to person in droplets. Full stop. And so the extent to which we effectively lock down in terms of that transfer is everything to do with how quickly the economy can recover. And indeed, if we don't effectively do that, the experts have warned, and this is a very good point, is that yes, we're working on a vaccine, and yes, hopefully that will all work out in the next year or so, but in the meantime, if we continue to have this spread go parabolic the way it is right now in the United States and in many parts of Canada, throughout Europe, the UK is now in the midst of its worst economic contraction since 1709. I mean, these are hard to get your head around how deep and broad this particular downturn is. And so we're all in this together in terms of the globe. The vaccines are being pre-ordered by all the wealthy countries. So that suggests that, that's great potentially for if you live in places like Canada and Australia and the United States. But the reality is that the poorer countries, if they don't have access to the vaccines, that we're also going to have a very uneven economy in terms of global recovery. And that will be a headwind continuing into the next year or two. So all of these things suggest that we don't want to get too overly zealous. It's a marathon. It's a preserve your liquidity. It's try and, self-control, self-discipline. Don't spend too much, don't risk too much, and try and figure out intelligent ways to prevail over the long run.
We'll have more with Danielle Park right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. Danielle, the stock market continues to look strong. What's behind that strength, or is it all tinfoil, mirrors, and smoke?
Well, it's remarkable. We've had in speaking of warp speed, we had the fastest 1 month bear market decline in between February and March, followed by this parabolic move in many prices in the last few months in particular. Now the S&P 500 as an example, the U.S. stock market is probably the most overvalued in the world today. It has been the direct beneficiary of the central bank policies and injections and the speculation and the online trading and the Robin Hood crew and, all the sort of Wild West stuff that's been going on, stimulus checks to individuals ending up in the casino of the markets. And that's all very tracked in terms of the fund flows we've seen. So S&P 500, if you look at a chart, I've just put a few on my blog today, just shows the parabolic price move, especially in the past couple of months, over and above the reality of corporate profits, after-tax corporate profits, plunging, real GDP plunging. And historically, we had a disconnect to a much lesser extent, between the late 90s and the top of the 2000 dot-com bubble. We had a milder disconnect, very much milder in the financial crisis, where again, you saw the price of stocks, overshoot profits and actual growth in the economy. And then you get a mean reversion where it actually comes back down to rejoin with the real economy. So we've had this great decoupling that's happened this year, and there's nothing to expect that it won't reconnect as it has done in every other single episode for the last 50 or 60 years, just in that one chart in particular. And when we look at the constituents of what's really driving this really outrageous price moves, it's the FANGs of the world. It's the Microsoft, Apples, and Amazons, that crew. It's the Teslas. Great car, but holy cow, if you looked at the chart. I mean, awesome if people had took a flyer on some of these shares and have enjoyed this parabolic move up. The question is, what's the strategy? You know, when do you sell? When do you take your profit? Because there's no chance that a share can continue to go from here to Mars in terms of price. It is on planet Earth. At some point, there is going to be a reconnection. And I think the other thing that people miss so much is that the U.S. dollar is the fundamental catalyst underneath all of these things. It is the benchmark currency to the world. It is the great liquidity provider. It is the fundamental investment currency of the world. And what you see is that we've had, we had a big spike in the U.S. dollar value between February and March, and that caused this cascade of plunging prices in all the other risk assets. I often describe it as a teeter-totter, where the U.S. dollar's on one side and the risk assets, the stocks, the commodities, the corporate debt, this sort of thing is on the other side. So when the U.S. dollar is rising, all those other things start falling, and vice versa. And so since March, we've had this falling phase again for the greenback, and that always makes the most speculative people and picks look genius. And then again, the inversion happens after the dollar gets to an oversold point, which long-term support, again, a chart my partner Corey Venable did, and I put on the blog, showing moves in the U.S. dollar index, the basket as against the basket of global currencies back to 1996, and it just shows there that 92 is a really significant support area for the greenback. And if it can hold 92, it suggests that we could indeed see the next rally phase from this deeply oversold condition for the U.S. dollar, where currently everybody is, extraordinarily bullish around risk assets and extremely bearish around treasuries in the U.S. dollar. We see that in the global fund flows and sentiment indicators, advisor newsletters. The ratio is essentially the most bullish it's ever been. And so those are usually good indicators that you're about to see a trend reversal that no one is typically expecting. And all we need to do is see some bounce in the U.S. dollar. If it does around this level, it wouldn't be surprising for it to do that. And indeed, you would get this sort of cascading impact on the other side of the teeter-totter. So as an example, today, the U.S. Equity markets are closed for Thanksgiving, but indeed we see that the U.S. dollar has held around 92, slightly positive on the day, and you get this massive sell-off in the cryptocurrency world, where the Bitcoining companies are all off, between 12 and 26% today, just in that one-day move, where oil, again, which has been a benefactor, rising as the U.S. dollar fell in the past few months, has taken a hit today as well, back below $45. So you see that sort of impact. So I think people really miss the importance of those macro underpinnings. When they start, speculating and not doing actual work or math, they really sort of take gains as a sign of their intelligence and brilliance rather than luck. And they don't manage their risk accordingly. And then, as I like to say, I think it's important for everyone to understand that most people who are taking speculative bets right now in these markets are also heavily indebted at the same time. Whether that's personal debt, whether it's margin debt in their trading accounts, usually it's both. And that means that their tolerance for any hit to their income or any losses on the capital side are very minuscule, and they typically begin to sell in panic en masse. So that's the kind of conditions we've set ourselves up for once more, that the arresting of the downturn that began in the spring with the liquidity injections and the vaccine hopes. I think, there's much room for disappointment as we head into the new year.
We'll have more with Danielle Park right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, CMHC reports that the deferred mortgage rate in Canada fell to 5% in September. How do you react to that?
Yeah, so the trustees in bankruptcy are still reporting that there's an awful lot of people who have been kept alive by tapping more credit and or government checks, and that they basically, they want to keep the roof over their head, of course. So the extent to which deferrals had to restart, everyone had a certain period of months they were allowed to be deferred, and then they had to restart their payments in September in a lot of cases for the early deferrals, and many people have been able to restart those payments. CMHC has been reporting that, and other authorities as well. So on the one hand, that's great because you don't want people to default or lose their homes. On the other hand, I think that we're still in a little bit of a dreamland state here in terms of, we know that, again, back to the employment picture, we had only recovered something like 74% of the jobs lost in Canada up until October, when we've now entered this next shutdown phase, which is really hitting services in particular really hard. So I think that, it's great that we're seeing people back mostly to paying their mortgage, but I don't think it means, again, that everyone's in great financial shape. I think it's a question of just deferring the reckoning that's likely to come again as we head into the new year.
The Ford government in Ontario has decided to cap the fees charged for food deliveries. Is that a good move?
I think it's essential when you look at the strain that's going on in the restaurant business. I mean, we all want restaurants to be there after the pandemic, and they are mostly small business operated. They don't have high margins at the best of times, and obviously with being reduced to takeout only, it's extraordinarily difficult. A lot of them will fail, and everything we can do to help keep those local community businesses afloat is obviously good. I mean, myself, I have not been using any of those delivery services because when I discovered that they do take typically 30% of the cash out of the pocket of the person that's providing and preparing the food, it just struck me as obscene. Especially given, again, as I understand the margins to be so thin in the restaurant business. So I think to the extent people can order food and go and pick it up, that would be much more preferable. I know a lot of restaurants are using their idled wait staff to actually make deliveries, but the extent to which they have a good following already and a good website ordering system, I think, comes into that a great deal. Some companies were only getting their volume through these apps, and so they felt sort of enslaved to have to do this, even if it was barely paying for the cost of the food. So I think it's a step in the right direction, and it's interesting, Mr. Ford being a conservative government, and there's this sort of I noticed this with Mr. Kenny in Alberta this week as well. This general presumption that government shouldn't intervene in interfere in small business or the rights of individuals to define themselves and the terms of their interaction, which in general is all great. But in reality, there are certain times when the government does have a role to play in setting some reasonable limitations or some reasonable limits. I think one of them is certainly in business models which are predatory or gouging, to the extent that large corporations, large public corporations, are gutting the small businesses and really leaving the communities and the employment on a domestic level much more, devastated as a result of that, while they siphon profits out to public shareholders. I think we really have to be reevaluating that. There's just not enough cash to go around to allow that kind of gouging out of the pockets of the local communities right now.
Some people are suggesting a so-called wealth tax to go after the companies that have increased their profits massively. Is that possible? Is it plausible?
Yes, there's a lot of new proposals coming in. Now, the extent to which, for example, Mr. Biden will be able to do things like increase the corporate tax rate, which he proposed, to increase it in the U.S. to 28% from 21%, where Mr. Trump had reduced it. The extent to which he'll be able to get any of that passed really will depend upon the runoff in the Senate two seats in Georgia are up for a runoff election. I think it's January the 3rd, and that will really dictate where the balance of power ultimately lies in the Senate. And if they are able to get any tiny majority there, they may be able to implement tax hikes more in line with what was discussed. They also want to bring in an estate tax. But generally speaking, you and I have talked about this before, I think all governments are going to have to look for more revenue streams, and obviously they have to take it where they can find it. So there's no point when half your population is on government subsidies just to eat, which is essentially the case today. And we're seeing the pullback really, even in the high income earners in Canada, they are saving more and spending less at this point because of all the uncertainty, and because they're shut in and they're not traveling and going out the way that they were. Consumption is really down. So ultimately that's positive in rebuilding the coffers, but it also means things like transaction taxes and consumption taxes are going to be down as well. So the governments are losing revenue at every front while they're also paying out more than they ever had. So certainly I had a conference call with some auditors and accountants this week, and they were just talking about the reality that they expect, higher taxes to be coming down the pipe in Canada as well in 2021. So I think, that's just the math of it. We have to kind of be adults and look at it. Obviously, no one likes to pay more tax, but also with respect to corporations, there's a lot of room there to improve the collection models, because in many ways, if you think about it, the way in which Amazon, for example, got to conquer the world in terms of a retailer and take so much business from the mom and pops in local communities in the retail sector was that they operated for so long without having to pay tax. Right, and it was because they were a new business model and they were not caught by the local, regular, if you're domiciled in a certain place, you pay income tax to that province or federal company for federal level. So anyway, that model of making your profits over the internet and not, or over the whole globe, and having your head office in, the Cayman Islands or somewhere that's a low tax zone in the south of Ireland, this sort of model has really run its course because there's so many holes in the coffers. So I think that they're moving to different proposals, but that have more to do with being taxed where your customers are. So this idea that if you're benefiting from production or the workforce, the water, the infrastructure, the roads, wherever your customers and workers and production is where you should be really paying the tax. And I think that's going to be the model that becomes common all over the place in the next decade.
Hilliard Macbeth pointed out Canadians have tucked away an extra $55 billion in savings so far since the virus hit. Is that good or bad news for the economy, or is it just good news for the individuals?
Well, you have to look at where the money is put, and CIBC was just doing a review or a study that I read on this just the other day, and basically talking about the fact that, so there's two camps there. One is people who have built up cash. They still have a lot of debt on their personal balance sheet and perhaps on the corporate side, if they're a small business owner, they still have a lot of debt, but they've built up cash in savings accounts as a liquidity buffer for this very, very uncertain time. So on the one hand, that's great news, but on the other hand, it doesn't mean that it's all, net equity, right? In fact, when we get through the period where they're maybe not terrified for their very survival, they may in fact use some of that money to pay down debt. A lot of people, for example, took funds on lines of credit in the spring out of fear for that their credit might get, cut off at some point, and they put that money in a bank account. So we have to be careful that we don't just think of all savings as all net good and everybody's loaded. The second category of people that have savings are, as I say, the higher income earners. They too often are very highly indebted, but of the people that have actual net savings, they tend to not consume as much, right? So they may have, they're into a position where they're not making any payments. It's a lot easier to save once you get to this net cash flow basis with no actual debt payments going out, which is one of the reasons that I'm always urging people to try and do that first before they try and do other kinds of investing, is make sure that they get their debt to zero so that their income is their cash flow is much higher. So of those people, that's all positive that they're building up cash. It's just that, again, the percentage of that which is used for consumption is not likely to be great. It's more typically savings. And savings is present savings is present consumption denied. That's how you get savings, is by deferring your consumption now so that you'll have some savings for consumption later. So I think it's all positive, but it doesn't necessarily mean that we're going to see a huge amount of that cash come right back in the near future.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her website jugglingdynamite.com. If you have any questions for Danielle or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.